Hi, friends. Simit here from InformedTrades.com. Today's Friday, May 30th, 2014. Time for our daily Forex chart review. Basically, in these sessions, I share the trades I'm placing, adjustments to existing positions I have on the market, have my trade history, document on my blog over on Informed Trades. Check that out. Of course, a lot of the information, or if any of the information I'm presenting to you is unfamiliar, you can check out Informed Trades. We also have a lot of learning material there, a lot of information covering various forms of technical analysis, not only the method that I use, but many other styles, many other markets. Check it out. Register as a member. Share your knowledge. Ask questions. We can all learn together. Okay, so let's take a look at the charts. First chart I always like to look at is a chart of gold, as I have a considerable amount of my net wealth on a relative basis in gold. I'm in that for the long term, so I'm not so concerned with the daily price movements, but I do want to keep an eye on the overall big picture, as well as I'm still adding strategically, so identifying when there are times to buy and when there are major turning points that warrant selling. See if I can get in on those. Okay, so gold has broken out of its discussed. It was in the trading range for 2 months, going back to March. It recently broke out. Now it looks like we're seeing a little bit of exhaustion of the bears. It's too early to say that for sure, but we are seeing the candlesticks get smaller and smaller ranges. So you see this once we see the bottom, the hockey stick curve, but it's starting to taper out a little bit, like the end of the curve. So that could signal, a potential buying opportunity for those who want to give a shot at going long. If you think this is the end of the bears. Personally, I love the idea of buying in this range, 1180 to 1280. Let's see though. Let's see what happens and watch. I'll be buying. That's not to say that it's a bottom, but let's also see where, if we can get, ideally before buying, I'd like to see a trading range of sorts. I'd like to see what signals accumulation. Now it may be that we're just pausing for a day or two and then we're going to resume down. I do think 1180 is a reasonable target, and that would be my expectation that price is going to revisit this level. With that said, I think if we see a trading range form here, I'd be interested in buying. If we see a trading range form again down here, I'd be interested in buying between 1180. If we break 1180, if we break the lows that we set at the start of the year, I think that's a much greater technical concern. And then I want to reevaluate the fundamentals and the technicals. But so long as 1180 holds, I think the overall bullish argument is still legitimate. Anyway, that's my take on gold. Let's go to the Forex trades that I have on at the moment. Okay, and we can see that in the watch list I have. I currently have 4 trades on at the moment. They are all at break even, so my account is completely de-risked. When I mean they're all at break even, I mean my stop is that the position has advanced in my favor, and I've moved the stop to where my order rate was. So if price comes back to where I entered, the trade will get closed out, and I will not lose any money. Of course, I won't gain any money, but I will not lose any money either. So that's key, and I generally don't move to break even. I don't move up to the break even level until that is cleared, moved sufficiently in my favor, where I think a retracement is less likely, or that if it does occur, it's an important technical indicator. Okay. Anyway, let's take a look. The 2 main currencies that I've got on at the moment are the Australian dollar and the Canadian dollar. So let's take a look at Aussie yen. Okay, so here, I entered. We're in a clear uptrend here, or a pretty strong uptrend. I think we could argue pattern of higher lows in formation. Price retraced. If we look at this swing low to this swing high, price pulled back more than 50%. Here's the 50% mark. So we pulled back between 50 and 61.8%. There's a support level right here. You could argue right around this area. You might actually argue it's a little higher, right there. That way we get the highs from these candles here, and this in particular, this candle here. So price formed a hammer candlestick pattern off this support level after retracing more than 50% from swing high to swing low. To me, that's a great entry sign. Also, we pierced the 200 exponential moving average, so I thought there were lots of signs here that bulls would be stepping in. I put my stop level sufficiently below the entry point in 200 exponential moving average, also beyond the low a long way. This orange line was the high of this spike candle. It basically argues a resistance level. Here, this resistance level, which is emphatically here, above it. That is when I stopped to break even. Move my stop. So we're holding out part of it. With the yen, I'm interested in a long-term trend and see if a big part of in the yen to come just to the these we can InformedTrades.com that illustrates some more of the Japanese economy, at least from perspective. So I'm interested in if I can get the weapons. I don't know, but I'm the safe and situation. Mostly take off. Also orders for larger thousands. The end sort of good on that. A little bit less dollar or and this just got I think yesterday. US dollar. California, that was accumulation, right? Trend line, forming. We see that this also occurred here, back in with a trend line with a range pattern. Uh, Resistance level here, which was a support level in most of it, so I break even. Past like the 200 exponent moving average thing would be like that. Oh, hold on. A little bit here. Mine is moving to break even. Uh,